Okay, traders, welcome to Wicked Wednesday. Today is August 31st. Welcome to this live intraday strategy webinar on SB Trade Desk. We're about 10 seconds away from the release of Canada GDP, guys. We've been looking at the dollar CAD. In just a couple of seconds here, we're looking for an annualized read of negative 1.5. Again, remember those Alberta fires. Negative 1.6, so slightly weaker than expected. GDP year on year slightly higher, month on month slightly higher. So limited effect essentially being seen here from the Alberta fires, while the GDP annualized second quarter did fall quite, I'd say, in line with expectations. You did see a slight uptick for the previous first quarter print from 2.4 to 2.5. So broadly speaking, this should be a real non-event for the CAD and in and of itself on this mixed data read. Looking at the dollar CAD before we jump into the other data or the other pairs today, guys. Look, this was a big region here. I personally got stopped out of a dollar CAD short from 30.80 on that rally that took us through or test of 31 last night. Next major area of resistance, if we do make a topside break, you have a huge Fibonacci confluence just higher here at 31.15 to 31.56. So a couple of different ways this could sort of offer an opportunity is if we do rally or spike high into the U.S. Open, into this region, I'd be looking for possible exhaustion. Really, you'd need a break below 30.67, 30.60 here to validate at least near-term weakness for dollar CAD. So quick update here. Again, we'll come back to it later if we need to in the session. But guys, welcome to everyone here in the room. Graham, Joel, Mark, Pete. Can't get through everyone, but welcome to the room nonetheless. It's the last day of August trade. So I'm going to start off the session just by, again, telling you guys not the ideal scenario, not the ideal market conditions for intraday trading strategies. You just don't trust the moves, okay? There's a lot of portfolio rebalancing to these monthly closes. It is thin holiday trade here, guys, in New York. Last full week of summer, last day of the month, you got NFPs on Friday. You got an extended holiday weekend for Labor Day here in the U.S. Not the best scenario. So that being said, if we do take any positions, I'm currently flat, but if we do, you're going to use much lower leverage. And we're going to be a lot quicker and much more selective in getting in and out of the positions. Like I said, just don't trust these moves, guys, at the end of the month. You'll see a lot of back and forth, a lot of a break of resistance and a reversal, and you just don't want to get caught getting chopped up in this market environment. Okay, that being said, let's jump into the good stuff. I want to take a little bit more of a longer-term approach today on some of our outlooks as we just look forward to the open of September trade and what trades we could be looking for into the open of the month. I also want to leave as much room for questions as possible. So this is the kind of session, guys, where if you have questions on strategy, technique, specific pairs you want to review, feel free to throw them on the message board and we'll jump right in. All right, so here's what the dollar index looks like to start off the session. We're still trading mostly higher against most of our major counterparts here to start off U.S. trade. Here's what the relative performance looks like so far. So you can see that the strongest performer is actually the Kiwi, up 0.35%. Don't really have a good grasp on what's going on there, but we'll take a look. Sterling up 0.23%, testing session highs here. Aussie's been pretty much a flat non-player. CAD has also been pretty much a non-event until today. Japanese yen down 0.4%. And Japanese yen we highlighted in last night's update as well. You're coming in some near-term resistance. Don't want to start calling shorts, but you're coming in some near-term resistance. So for those of you holding longs, there's some targets that you might want to consider upcoming here closely. I did get a tweet yesterday. Just wanted to address here. Was that Wes? Wes, I just want to make sure that we're on the same page. When I'm saying that there's a resistance level within an uptrend, that's not necessarily going to be your signal to short, right? You're always going to be best off getting long off support within an uptrend. You're always going to be better off getting short at resistance in a downtrend, right? Now we can take counter trend trades all day long for sure, but want to make sure that you're reducing your leverage and that those trades, again, you'd be a lot more nimble on those. So just keep that in mind. I saw you talking about dollar CAD yesterday. I was right there with you. I was in that trade as well. Good morning to you, Eileen, as always. Conwall says, sorry I'm late. No worries, brother. Good to see you in the room. Question here from Eileen saying, strategy question. You've spoken before about waiting for the turn in regular conditions. Can you talk more about that? How much wait for those, etc.? Wes says, noted, thanks for the advice. Hey, you're more than welcome, Wes. Yeah, I just wanted to touch base on that, man. Feel free to reach out, as always, obviously on Twitter, on SB Squawk. That's what it's there for. Eileen, good question. I think that's a question that's better fit more for like the 5-minute charts and when we're looking for a spike into resistance. And it actually matches pretty well with the dollar CAD, right? So let's just take a look right back at dollar CAD. Well, before we do, real quick, dollar index, guys, nothing's really changed. This is the 200-day moving average that we closed just below yesterday. The 618 key retracement of the decline off of the July highs comes in right here, okay? Momentum's at 60 resistance. I don't know what you want to do with this, but be mindful that you are at near-term resistance and you still have the uncovered close from the start of the week. Okay, so here's what it looks like on the 30-minute. You're getting some, I wouldn't say it's divergence necessarily, although these two peaks did make lower highs. Obviously, when you have divergence above 70, these are your weakest signals. The closer these reference points are to 50, the stronger the signal becomes. So you are getting some divergence, possibility for some exhaustion here, but long story short, you want to be careful, try to call a high on this rally. Okay, so I do think you're primed for exhaustion. You would need to get a break below at least the Asia lows here to get some sort of kickback lower in the dollar index. So again, heading into the close of the month, these just, I just don't trust these moves, guys. So even if it breaks higher, if you're holding dollar long exposure, 12,046, entering the long side of a dollar trade now, today, not my cup of tea. Okay? Okay, let's take a quick swing back towards dollar CAD since we just got that data. We'll walk Eileen through some of those, through a question there, and then we'll jump right into last night's update. So here's what dollar CAD looks like today, guys. Again, this was a big region for me. You had the median line, which caught the lows. You had the parallel here, which caught a nice pivot in price. And then here's the upper parallel breaking out, and you see that price is sitting above that right now. Near term, like I said, you do have a resistance region just higher at 131.50, 131.56. This is a 1618 extension from the advance off the lows here, and just a basic 786 retracement from the decline off the July high. Okay, obviously key resistance is going to be the July high day close. That's just higher at 31.86. So let's say, Eileen, that we head into the U.S. session and you do get that dollar strength pushing us into resistance. We're looking for some possible near-term exhaustion, maybe to give us a downside play just to the median line here, right? How would I know what to look for? Well, that's where the 5-minute chart comes in. And we oftentimes talk about waiting for the turn, and it's exactly what Eileen is talking about. What we mean by waiting for the turn, guys, is you're never going to catch the spike high. Well, let me take that back. Sometimes you do, but it's complete luck, right? You never really catch the spike high, the high of a trade. So when we talk about waiting for the turn, there's certain conditions that we want to see met for the turn to materialize, for us to have a little bit more conviction on the trade. So what happens, or the best way to play it, is you look for the market to come into resistance. Then on the way down, you're doing nothing. Okay, what you're looking for is the market to go back and test that resistance and fail. A, that gives you a stop against the previous high, and B, that gives near-term momentum an opportunity to give you some sort of signal, i.e. a close hold at 60 or a hold at 50 on the upside. That would suggest, again, the topside momentum has got no push behind it, or even a downside trigger. You might not trigger on the initial spike. On the pullback retest, that downside move might give you the trigger break. So that's what waiting for the turn means. We want to see price action start to move lower, momentum start to turn before you start to short the trade. Now, these signals all become much easier if we're going with the trend, guys. Like I said earlier in the session, all of these signals become much cleaner if you're just looking for a rebound within a downtrend to sell, if you're looking for a pullback within an uptrend to buy. And that's when those turns tend to become a little bit easier because momentum is more poised in the direction of your bias. Price, again, hopefully, typically, we'll be looking for a pair that has a little bit more structural guidance to it, right, with regards to either a slope or some sort of pitchfork. But that's when really it tends to be a lot more beneficial or easier to identify. Eileen says, using 5-minute better than a 1-minute. So typically I'll be looking at both. I always have both of these open, Eileen, just so I can get a better picture of what's going on in real near-term price action. But I don't want to put too much emphasis ever on the 1-minute chart, guys. Remember, the more granular you go, the less impact any indicator is going to have, because the time series of sheer data that you're putting into it is minimal, right? So I would love to see these start to materialize on the 1 minute, Eileen, but typically the 5 minute is going to be a little bit more concrete for me. Does that make sense? Does that help? See if we can, when we go through these pairs today, let's see if we have anything that's kind of peaking. We can look for something that we're kind of looking for a turn on. Here's an example, Eileen, of a turn from support that we got here in dollar CAD. Okay, last night. And the pullback from the Asia high, here's the European open. We came into a low. You're not going to take that stop because you don't necessarily know it. You don't know necessarily that that's going to be the concerted low, right? But we rally as momentum holds 40. That's giving you an upside bias still. That momentum is still constructive. It rallies higher, pulls back. The failure at 50, and you look for a trigger, which this one did have one, but it was pretty ugly. Whoop! Where is it? Something like this. This would have actually been something I would have been interested in. Whoop! On the move off this region here. 30.94, stop against 30.84, maybe a 10, 15 pip stop on the rally here. You had a hold at 40, hold at 50, and a defense of the opening range low for now, Asia and London. This would have been a long position. Again, under normal market conditions, I wouldn't necessarily get long dollar CAD ahead of GDP, but you get the picture. That would have been an entry for me. Does that make sense? Much, much clearer. Really helps, Eileen says. Awesome. Awesome. And again, if we go through any pairs today that have sort of some levels that we're looking at, we'll drill down deeper. But that's sort of the initial way that I would start to approach this. Same thing with dollar CAD here, guys, today. If we do get a spike into this region, like I said, you might be offered a little bit of a near-term counter trend scalp. But on average, for all these trades, you're going to be better off buying into support, sticking with the trend. All right. Scott, great to see you, sir. Says, good morning. I have TV charting question. Trading view, I'm assuming you're saying. Where do you find the monthly, weekly, etc. open settings so I can have a line showing those levels? So you need to get, Scott, an indicator. Just click on this indicator button up here. It's going to bring up the indicator window. And look in for weekly open. And you'll find this one by Chris Moody. Okay? Actually, it's this one right here. Code plots, high, low, open, close, daily, weekly, monthly. And once you've installed that, or once you've selected that, you can set it so that it'll automatically give you, for my charts, you'll always find that the purple dots here are the monthly opens, and the gray dots here are the weekly opens. Obviously, on the daily charts, you'll only have the monthly opens. I won't crowd that up with the weekly open. Scott, you got that? And then once you do find that, just, you can always just favorite it so that it's ready to go in your indicator list. Okay, he says, yes, thank you. More than welcome, Scott. All right, I see your question, Conwal. Definitely going to go over crude and gold, bro. Both of those are coming into some, beautiful levels. But let me get through the update from last night first. So we've gone over the dollar index. We've gone over dollar CAD. Here's what euro dollar looked like last night. So we did have some data from Europe, and although I gave you a warning sort of last night that I'll certainly be not looking to trade anything for the remainder of the month, here's what the data looked like from Europe. So first, you got that German retail sales unemployment numbers first. Retail sales actually came in stronger than expected on a month-on-month basis, blew out the expectation with a 1.7% print. Retail sales fell short. That was kind of curbed by a weaker print on unemployment as the unemployment headline rate held 6.1%. The reason unemployment tends to be a little bit more significant than broader Eurozone unemployment is just because of the sheer size and magnitude of the German economy. So that was on tap at 2 o'clock. Later in the session, you did get some of that unemployment data from the broader Eurozone area, which actually upticked 10.1% from 10%, with CPI pretty much in line with expectations, a bit softer. And we all know that the central banks have all been trying to stoke CPI. So with core CPI continuing to remain lackluster here at 0.8%, this is the advanced read for August. Obviously, we'll get an update on this later in the month. Not necessarily going to be good for the euro per se. Here's what the euro is doing here today. And here's what we looked like last night. So we were coming right into this initial support structure, just a Fibonacci confluence at 111.39, 111.45. You had a 1618 extension off the high, 50% retracement off the low, and we wanted to keep our focus lower while below the monthly and weekly opens, which are right here, 111.69 basically into 111.76. So you got a nice little range here of resistance. You want to stay focused below. This is why I don't like trading the monthly closes, guys, because this is exactly the kind of price action you get. You might have gotten faked out on a breakdown there. You might have thought this was going to be a reversal back into resistance here. You might have thought this was a breakout again down there, right? So look, it's bearish. No one's going to argue that. But as we always know, it's not just about knowing the direction. It's about having a trade setup, right, with a clear, well-defined stop and entry in a target. So at this point, you know, even intraday, you're shooting straws here. There's nothing to do. I mean, even if this thing rallies back into the London high, guys, and you get a short trigger, what are you going to do? Target 111.58 into 111.38? It's just too tight. So I just wanted to bring this up to give you guys a quick update on the levels heading into the close of the month. If you are holding a euro short, which I've gotten some notes that some of you still are, I wouldn't necessarily scare you out of taking the trade off. But I would just highlight these levels. So your next downside target of significance is 110.85, and that's a 618 retracement off of the advance from the lows. Okay. Any way you look at it, guys, we broke below a multi-month ascending formation. So yeah, downside bias is in play. But again, we've been marking divergence all into these lows. And let me just get rid of that. Add a new trigger here. You know, that might give us a little bit of a near-term relief rally if it gives out. But just heading into the end of the month, guys, use caution. Really not much here to do at this point if you're not already short. Any questions on euro? Now, the other one that's been in play, or the other one that I wanted to highlight yesterday, was Euro Aussie, which was an interesting Euro cross. And this one's been mostly afloat on Aussie weakness. Now, here today, you are seeing that the Aussie is kind of holding its ground as the Euro is really experiencing the bigger lot of the losses. So Euro Aussie seems to be holding this really interesting bull flag, which could give way to a nice opportunity to get long if we dip a little bit lower. And we're starting to get that dip here today. Here's what Euro Aussie looks like. Or actually, dip didn't really materialize. Here we are back at the session highs here. But here's what it looks like on the daily chart. The broader trend is higher. And I remain constructive. If you guys remember, this was highlighted a couple of weeks back. The broader trade remains constructive here while above the monthly open, which is right here. We tested it as support last week. And right now, it's deadline with that 50 line off the lows. So I remain constructive over here. As it stands, we're simply holding a very well-defined range. And we basically need to clear the 2016 open at 149.14. And then subsequent target would be right here. Nice confluence of the 100-day moving average and the 50 line, which has already bore fruit with that rally that we made earlier this month. So I really like it. And again, although I might not have a play on this just now, the ideal scenario would have been to see a little bit of a breakdown here to get back onto the long side for the top side break. End of day, if we do break and close above that flag or above that descending channel formation, look to buy pullbacks at 149.14 and subsequent, like I said, that 50 line 100-day moving average. On its face, this is simply made a weekly opening range. Here's your weekly open. Here's your weekly opening range high. The low was made. defended, and we're just looking for a break of this range to validate a near-term bias. Typically a nice range scalp, so if it does make that topside run, expect it to give us a little bit more of a burst. I would not go chasing the breakout right off the bat. This is another example, Eileen, since we were talking about how to trade the turns, how to trade the breakout, right? How do I trade a breakout? Well, I'm not going to go buying at the weekly and session and monthly highs, right? That kind of just doesn't make any sense. So even from a near-term prospect, if you do get a breakout like this, you have to wait for the pullback. You have to wait for the pullback to check former resistance as support, and that's what validates the breakout. So if we break out here, we pull back. On this pullback, we look for the same type of metrics that we just talked about when we were buying that spike into the high on dollar CAD, or a spike into the low, right? Look for the initial low to be made, the market to come back and test it, and then on the near term, you want to take a stop against that low. I shorted 2 lots of, okay, crude. We'll go into crude in one moment, Conwall. Any questions on Euro Aus from last night? Levels are pretty clean. Levels are pretty clean. So we went over Euro Aus and a possibility here of a bull flag. Bullish invalidation for the broader trade remains at 46.95, 47. As long as the trade remains above the 47 handle, the broader focus is higher. Now that we covered Euro Dollar and Euro Aussie, I wanted to take a quick look at Aussie Dollar. And here's what the Aussie Dollar is doing right now. These are the same levels that were highlighted in the previous update. From here, this is the Sunday update on Aussie Dollar. Well, I guess let's look at the 120 minute. Here's what it looked like. We were coming in support, and we talked about this on Monday and Tuesday. You did actually have an opportunity to get a slight long here, which failed ahead of the 759, which is the bearish invalidation level, right? And as long as we stayed below this, as we noted on Sunday, that's going to continue to be key resistance and bearish invalidation. So we rallied, failed miserably, couldn't even get much of an approach to 60 here in momentum, and the break here yesterday really solidified the downside bias for for Aussie Dollar. So with Aussie Dollar moving off, again, here's where Euro Aus becomes a play that you can sort of get a little bit more comfortable with if the Euro finds some support just lower from where we are now. That is versus the dollar. But near-term support, 75. We were sitting on that all night long. Here's the break. Again, end of month flows. I don't know if I'm going to chase this, but the next downside target objectively is 74.50, but there is an interesting parallel that I want to bring to your attention. If we take the broader slope, and here's the daily chart of Aussie Dollar, right? Remember this slope, which has been so amazingly point on with every turn. Here's a parallel of that same slope, which caught the highs that we made both in June and this month. Well, if we take that same parallel, slide it down to the lows that we made here. Whoops. You can see that you get real clean touch points, and that comes in just ahead of the 50% retracement. Okay, so again, further conviction, further validation that we are working with the same slope, or that we're working with the proper slope, which has been in play now for so long. So again, just wanted to bring your attention ahead of that 50% retracement. You know, keep your eye on this median line. Right now, it comes in just ahead, somewhere around 74.65, 74.60. Still going to be working with a 75.50 resistance on this for now. Bearish invalidation still is going to be at the weekly open. We'll lower that a little bit from 75.90 to the weekly opening range high. Now, heading into next month, you know, the broader picture for the Aussie is still looking for a little bit of a move lower for support. And I would love to see this thing give us a little bit more of a conviction drop and a spike washout to try to get a little bit more upside momentum on this thing. You can see that the daily momentum signature is dipping into 40. That's the first time that we've done that since June. And the last time that we did do that was the month of May. We spent the entire month sub 40, and once we recovered was the beginning or the onset of this larger rally that lasted for a good 3 months into the monthly high here. Okay, So I am going to be looking for a low heading into next month for the Aussie dollar. Again, remember, next month, central bank rate decisions for all major central banks across the globe. So certainly we won't be at a loss of event risk heading into the start of September trade. Any questions on Aussie? Okay, last update from last night, I just want to go over a quick review of dollar yen. Again, that just continues to climb higher and is now approaching near-term resistance. So here's what dollar yen looked like last night. The initial resistance that we were looking at, or the initial targeted topside approach, was 102.60 in a 102.78. Remember, we talked about that in the webinar. We broke above it. That's now near-term support. Here's dollar yen. Oh, and we just might have kissed off that near-term resistance level. So we're looking at 103.53, a swing low from back here in, what was that, June 15th? The 50% retracement of the entire decline off of the July high. And just higher is this 50 line for the broader structure for dollar yen here, which has been in play for months and months and months and months and months. So a region right here, which we were looking at weeks ago or a couple of days ago, looking to come into focus within the next 24 hours here heading into the monthly close. So for dollar yen, obviously, again, the rebound that we've seen has been pretty strong. I wouldn't necessarily take a strong approach trying to short this thing, but keep in mind you're coming in some near-term structural resistance followed by the 618 at 104.47. So if you get a pullback, I'd rather use a pullback here to get back on the long side. Once we get a little bit more of a conviction high, tack on a quick retracement, look for a 38, look for a 50 pullback, and then a continuation higher. But essentially, structural resistance here is what needs to give out to validate the next leg higher. While below this median line, the long side is at risk. So keep that in mind if you're holding long dollar yens coming into this region here. Questions on dollar yen? My notes say resistance higher up. Yep, same level, same game plan. Okay, let's jump into your questions here at this point. We're making good time. Divergence matter at all on the daily or on the dollar yen 1 hour? I see what you're talking about. Again, remember what we just noted earlier, Eileen, right? These divergence signals above 70 typically are like the worst signals. I've just seen so many false signals of divergence above 70. Now, don't get me wrong. If you're at resistance, it still could pan out to a decent play, right? Because resistance is resistance. Remember, guys, we never put too much emphasis on any oscillators. It's telling you what has happened, not what's going to happen. That said, if I had a decent trigger support, if I had a decent trigger break to the downside, Eileen, while we're at resistance, then yeah, okay, cool. I'll take that divergence as just an added plus, an added cherry on top, right, for your conviction. But let's just even jump into the 30-minute chart. Sure, you can look at something like that. You can imagine a scenario where this thing spikes higher into this region, then gives us a trigger break, which would give you even a better idea to get a stop against that high. And the only other thing that I want to just note is that, remember, we never are going to advocate selling anything that's on an upslope above 70. Just not a good idea. A lot of people will start to say, oh, it's approaching 70, it's starting to get into overbought condition, I want to sell. Like, forget that mentality. It's going to chop you up like no one's business. The break above 70 in this region is when the market has the most push. This is when the market has the strongest momentum. I mean, don't take my word for anything, guys. Look at price. Every break above 70. That's the sharpest part of the rally. So despite the divergence that we're seeing, sure, I would still want to see this thing sub 70 and a trigger break before I start fading a rally into the highs. And it doesn't show in the 30-minute. I mean, this would actually, yeah, this is not divergence either. You're right. Yep. I mean, you can consider this divergence, right? This high and a higher high in price, this high and a lower high in the oscillator, but didn't materialize because we just made a new high and a new high in the oscillator. So just for some food for thought there, just some tips on using RSI and the way that I like to sort of utilize that. Makes sense. Thanks, and you're more than welcome. Okay, Conwall wants to look at crude and gold. So let's start off by taking a look at crude. Do remember that you have crude inventories today at 10:30 Eastern, that release scheduled. You also do get pending home sales at 10 o'clock. A quick reminder for anyone trading U.S. event risk. But here's what the crude chart looks like. It hasn't changed, guys, for the last few weeks, okay? And we're now coming, into that initial area of support that we talked about last week, namely 45.22 into 45.81. Okay, this region here, the actual rate is covering the tag. That's the swing lows, the lows for June trade in crude, and the 38 basic retracement of the advance off of this month's low. So your initial area of support, if we get more granular in this, just want to see what a 100% extension looks like. I would expect it to fall right in that same zone, actually. There we go. So even if you do just a basic 100% extension, 2 equal legs down, we're sitting there as well. Okay, 45.87 into 45.22, initial support here for crude. Now, Conwall, you're saying I'm short 2 lots of crude around 47, following your levels close, one around 45.88, or you closed one around 45.88. Very nice. One is still open. Your bias for gold you want to buy. Okay, let's stay on crude first. So first of all, beautiful entry at 47, not bad. I like that you took off one at 45.80, but listen, if you're looking to play this, you need to take a sort of step back and see how you're looking to play this. From a scalping perspective, you're done, right? You're done. You came in, you got a nice entry. I love where your entry was at. It must have been on that spike high that we made late last week. And you're into the upper part of the range for the interim support. This could charge a near-term rebound. So Conwall, if you're cool sitting into that trade for a couple more days on a rally back towards your entry, you could put a stop at break even and let it go. I do like it lower still, but you are coming into an initial support area. So my point is to tell you, Conwall, is that personally, Michael Boudreaux, if I was in that trade, I'd have my stop at break even on that second piece. The secondary target, I would actually have down at 42.91. Now you do get the 50 level here, which has offered a little bit of a pivot, but from a structural play, which this thing has continued to follow so sweet, so clean, you get the 50 line and the key 618 retracement at 42.91. So those are sort of the levels of the way I'd play this. I wouldn't put it past this thing, to be quite honest with you, to see another rally towards maybe even the upper parallel before moving over. We're heading into September trade. You do have a lot of event risk with all the central bank interest rate decisions and whatnot. But just keep that in mind. Keep that in mind. Inflationary, pressures are starting to subside a little bit, and I wouldn't be surprised, like I said, to see this thing, follow suit with this downside that we've been looking at since the high we made in June. Make sense? He says, sound okay. Was that you, Conwall? He says, yes. All right, cool. Let's take just a quick look at the 30-minute or an hourly chart. I just want to see if we got anything going on here. Well, I guess in time that 50% is a little more pertinent, okay? But on a broader daily scale, that 618 comes into a little bit more of a key region of resistance. At this point, just heading into the weekly close, your weekly open is the bearish invalidation level for the immediate downside bias that holds just above the upper median line parallel right now into the US Open. So here's the hourly chart if you want to keep this Conwall just for your reference here near term. Some levels sort of to keep in mind. Conwall says your levels are awesome. They're not my levels, Conwall. They're the market's levels. I'm just helping you find them, man. I appreciate that, though. And even at this point, something like this might be prudent. Okay. So that is Crude. Let me know if you guys have any questions on Crude. And guys, by the way, it kind of matches up with what we're seeing in dollar CAD, and I want to watch these both very closely. You know, Crude still has, like I said, a little bit of a support range that it could dip deep into. Dollar CAD's already above resistance. If this thing closes above here, you know, you're likely to see dollar CAD run a little bit more. So just keep that in mind. I know a lot of people like to work these in lockstep, but that's just not the case right now necessarily. So some food for thought there. Gold looks like this. The good old gold trade. And back in the day, if you guys remember, early in the month, 1355 was the focus. We put a short side bias while below that level. You know, you got multiple spikes above it, which had me getting a little tense too. Even the monthly open on a close basis held as resistance like no one's business. Here's what the line chart looks like. And here's the monthly close. Excuse me, here's the monthly open. Those dots that we talked about earlier. So not only did 1355 fail on every spike approach, but on a close basis, the monthly open held as resistance. That's a tell. Okay, that's a tell. Add to that you had that long-term trendline resistance multi-year from the record 2011 highs, and the turn down was holding this slope rather well. Now, yesterday you made a close below this slope for the first time, below the median line. After testing it earlier in the month, we sat on it into the close of last week. Here's the close, yesterday below. Keeps the focus lower below the median line. Near-term targets of support haven't changed. They've been the same for the last few weeks. You have initially the May high that comes in at 1303. You have the 200-day moving average that comes in at 1295, 1294. And then you have a key support confluence here, 50% retracement of the advance off of that May low. The 50 line for the current operative structure that we've been following here in gold since last year's lows, and basic channel support, basic channel support, all coincide right there. So, I mean, as odd as people are scratching their head in gold, I actually think this is one of the cleanest trades that we've had, commodity trades that we've had over the last couple of weeks. Both gold and crude for that matter, right? They're just continuing to follow near-term structure extremely well, reacting a little messy to that longer-term 2011 trend line. I don't like that we broke above that so many times, but again, markets don't work in a vacuum, and price action is the biggest tell. So objectively, even when we made this break here on the 24th, that was a clear break of the monthly opening range low. Here's a monthly open. Here's your monthly low. Made it on the 8th. Here's the monthly opening range break on the 24th. You're looking for that late month low. It's the last day of the month. We're at the lows. So just an example of how the monthly opening ranges can really hold. I mean, we didn't get the break till the 24th, which is why I always tell you guys, don't stress time, stress price, right? We set a high and a low within the first 8 days of trade, but that high low didn't clear till the 24th. What do you do in the meantime? If you're not playing the range, you sit on your hands. Okay, and here's the break and the directional bias confirmation. So that's all to say. Near-term support, 1303 Conwall is your initial first target here. You could get a bounce that could take you back into the median line, even maybe as high as the low day close again. I'm not sure why that's labeled low day close. Oh, last month's low day close, which is now going to be near-term resistance at 1330. Questions on gold? For gold, Conwell says, I want to buy gold around 1287. Your bias, thanks. Okay, so this is a good example of the same thing I was talking about West earlier, right? Look, 1287 is a beautiful level of where I would start to look for support. Doesn't necessarily mean you just want to throw a long position there, right? Because let me ask you this, Conwall. Where are you going to put your stop on a 1287 entry? If you're willing to put it below this swing low here, all the way down at like 1248, 1250, not even 1250, it had to be below 1249 at least, sure. That's a little bit of a bigger stop than I would like in my personal trading, so I wouldn't necessarily be interested in that. More so, we could do what we talked about earlier in the session. Wait for the turn. Wait for the market to rebound off this. Sow us a little bit of an upside. It's not going to be a straight boing, boing, right? You're always going to get, not always, but you're ideally going to get a rebound. The market's going to go back. Those bears are going to try to press it again, and then the failure is what gets you back onto the long trade. That way you have a stop of which you have a conviction stop of trading against the low. Now, sometimes you're going to get something like this. Obviously, this was the Brexit, so it doesn't happen very often, okay? But if something like this happens, so be it. You don't get a chance to get into that trade, okay? Taking a trade because of fear of missing out is the worst, reason to take it. Again, that's the Brexit example, so a little bit of an extreme example. But Conwall, I hope you get the picture there. Does that make sense on crude and gold? Conwell says, thanks for the guidance. Otherwise, you'd be lost. Well, you're in the right place, man. I appreciate the comments for sure. All right. We are going to spend tomorrow going over all the dollar trades ahead of NFPs, obviously. But I do want to take a quick round through here since we do have some time. We'll just look really quick at sterling and Kiwi. Trades that I've kind of been following, but I haven't put any trades on necessarily personally myself. Here's what the dollar or sterling dollar looks like. Again, like I said yesterday, you're sitting mid-range for the month. There's really nothing to do here right now. The only thing that's interesting for the sterling for me is the intraday chart. Okay, and basically what we just did here today is test the open of the week, former slope support, now resistance, and we failed miserably. We pulled right back off. So the range is still what I'm playing, or what I would be playing or looking to play for the week. You have not given it out. Your invalidation level now, or your key resistance, is still going to be the 50% retracement, which we just missed on this last approach. And that actually coincides into the open of Asia tonight with that same slope, support, now resistance. So a little bit back and forth action here in British pound, not really expecting much as we sit right in the middle of the monthly range. Look for the break of the weekly opening range to give us some guidance. Kiwi looks like this. And a very similar play in that Friday's radical price action. Again, you saw a break of that consolidation that we were in all week, take you right into the key resistance zone, 73.80 to 73.91. The high was exactly 73.81. So we literally probed right into it, broke same lows for that consolidation formation. And here, since the start of the week, we've just made a very simple range. Monthly open, 618 support is basically the opening range low. Right, that's your monthly open. That's the 618 retracement. Key resistance, even though the opening range high is at 72.65, I would still stretch it into 72.75 with that 50%. But no change to any of the levels for Kiwi dollar either. Hi, Mike. Can we look at sterling? Oh, well, we're there. Let me go back to sterling. Sorry, I didn't see your question earlier. Any specific questions here, Wes, on pound? Eileen saying there's lots of turns on the sterling. Yeah, it's been just back and forth. And a primary example of end of month thin liquidity trading. There's just no follow through. You know what I mean? And now you're heading into NFPs, and I guarantee you that the city's going to be absolutely empty on Friday. So just watch out, guys. I'm telling you the truth. I'm flat probably for the remainder of the week. I'll see if NFPs offer any good stuff, but yeah, I've learned my lesson over the years trying to trade intraday in this environment. Wes says, no thanks, you covered it already, my man. All right. And that is Kiwi dollar and sterling dollar. I do want to take a moment and just show you something that we covered a couple of weeks ago, Aussie CAD. Guys, that consolidation is starting to really get of interest for me. And with what's happening in Aussie and what's happening with Kiwi, I do think this is something you want to just keep in mind in focus. If you guys remember, we highlighted this back here at the start of the month as we were coming into the 50 line of this longer term, or not longer term, but median line formation. Remember, we had no conviction on using this. And we were saying, look, you had basic channel support off of June 10th low, and you have the 50 line. If this breaks, well, look for a drop into the 50 line of the broader structure, from the median line, excuse me. And that's exactly what you got. You got a break, came back, tested that median line as resistance, went right down to the 50 line, tested it as resistance, as support, right back up into the median line, and now here we are over the last 2 weeks in this consolidation. Okay, typically continuation pattern. So that would suggest you could see a downside break, right? That would more so go in line with CAD strength, which would suggest, again, if we're looking at dollar CAD, you could see that stretch into resistance or keep going a little bit higher before a pullback. All right, so look for this consolidation, end of story. I do like support at 98. That still continues to be sort of the main governing factor here, although you do have some fib levels that are just above it, but you also have just the consolidation support line right there as well. Resistance and last week's high at the monthly open. Levels are just super clear here. So something we'll want to keep in track as we open up next month's trade. All right, Aussie CAD. Any questions on Aussie CAD? Conwall, Michael, any trade any trade on you think is attractive? Conwall, I don't know if you were here for the whole session, man, but I've been saying no on any pair. No, I'm flat. The pairs, guys, the pairs I write about for you is what I'm looking at. So I'm looking at Euro dollar. I'm looking at Euro Aussie. I'm like microscope on dollar yen and Aussie dollar both. But do I have any open positions? No. Conwall, am I going to take anything on a day like today where we're closing out the month in a thin holiday trade weekend? Probably not. If something kind of pops out, I might take a quarter leverage trade, sure. But it's typically not the best environment for intraday strategies, okay, just flat out. You don't get any follow through. You're not going to get follow through on the moves. You're going to get a lot of back and forth. I just don't want you guys to get chopped up. And it's my job to sort of alert you guys to when those conditions might be prevalent. And right now, those conditions are prevalent. Okay? All right, guys, so if there are no other questions, I'm going to go ahead and wrap it up here. A quick reminder to everyone in the room, we do have Jamie on tap later this afternoon, 1 p.m. Eastern, with the midweek strategy webinar to go over some of the longer-term approaches and some of the swing trades that we're going to be targeting heading into the open of September trade. Obviously, we'll be right back here tomorrow morning at 8:30 Eastern again for a quick preview of all the dollar crosses ahead of Friday's highly anticipated non-farm payroll print. Now, look, we start off the month tomorrow, right? It is September open, but the thin liquidity, especially in the U.S. trade session, is likely to carry over right into Friday, guys. Non-farm payrolls, Labor Day, extended holiday weekend. Just make sure you have that in mind when you're taking any positions, all right? Best of luck trading. See you all tomorrow. Cheers.